Okay, so hello. We're all used to hybrid environment, right? So it's going to be a bit of me physically here, and my colleague Chris, as introduced by Arun. I believe he's going to be on the screen on each side. So those of you who are at the center, I think you either have to choose to be right or left when you actually, have a look. So bear with us on that. I feel a bit lonely sitting here all by myself with all these 5 chairs around me, but that's okay. You guys are all around. So hello, thank you, Arun. I'm HS. Today we will be talking about sustainability communication. It's a subject definitely that I believe every communication experts are taking more serious interest in, but not is it only an interest area, but there's a demand for action, and we all know it. So we like to be talking more in this space, particularly looking at Asia, where we have been lagging, because obviously this is a subject of an action that was pretty much spearheaded by the US and the UK because of the regulation issues from a long time ago. But since the pandemic, as we all know, things have changed, and I thought it would be an excellent momentum that we touch base and look at where is Asia in comparison to the US and the Europe, and really see, where the data point is with our colleague Chris from UK, who actually spearheads our sustainability and ESG efforts for us globally for H&K. And without further ado, there's Chris. I will have him quickly introduce himself, and we will start the conversation. Chris.
Hi, HS. And hi, everyone. I hope you can hear me okay. Sorry that I'm not there with you in Singapore today. It's a bit of a cold morning in London this morning, so I'm sure the weather there is much more desirable. But yes, as HS said, I lead our sustainability and social impact consulting business at Hill & Alton called Better Impact. And we've seen I would say upwards of 70 to 80% of briefs in a market like the UK focused in one way or another on the sustainability agenda or social impact agenda of the clients that we serve. So this is a huge growth area for us. And I think the same sort of growth that we've seen in Europe and in the US is very much starting to happen in Asia Pacific, and we really wanted today to explore some of the trends and some of the drivers that are really that are behind that change. And I think if we sort of dive straight in, I think we're at a really critical time for the Asia Pacific region, but also in the pursuit of sustainability goals. I think in particular, the world is changing very rapidly, and we set this theme for this discussion a few months ago, and we've seen some very significant changes in the international and regional context that will have an impact on the nascent sustainability sector in the region. I think before we start, though, we should clear up a few terms, because when we talk about sustainability, we're talking about the efforts of business to improve their impact on the environment and a range of related social issues, perhaps best described through the UN Sustainable Development Goals. When we talk about ESG, we mean specifically the range of metrics used to evaluate company and investment risk related to the environment and social issues and governance. You might think that we're splitting hairs in making this distinction, but there's a really important difference. And sustainability is about opportunity and risk. And the reasons for pursuing a sustainability strategy are significantly broader than the use of ESG to measure and report risk. You can have outstanding ESG reporting, but still be operating in a way that many stakeholders would deem harmful to the environment. And in recent editorials like the ones you can see on the screen here, the international media like The Economist and the FT, ESG has come under attack, and some of that is driven by an ideological debate about the role of business in society, and some of that is driven by the widespread use of these terms, ESG and sustainability, interchangeably, when in fact they're very different, and we have a significant difference, in terms of their impact on reputation.
Right, and Chris, I guess us as communication experts, that word, reputation, I mean, this is something that, of many things that we have to look after from that sustainability space, it is something that we need to look in terms of the linkage between how does reputation impact, from all this. So it could be a very, very basic question, but can you just, once again, give us a broad view about how is reputation linked to sustainability in detail?
Sure. And I mean, as we all know, reputation is defined by how you behave as an organization, what you say, how other stakeholders perceive what you do and say, and the alignment with their own expectations. And the extent to which companies are expected to take responsibility for their impact on the environment and social issues has increased significantly in the last several decades and provided opportunities and risks for company reputations. And these raised expectations have come from several different stakeholder groups, including consumers, regulators, governments, suppliers, employees, and investors. And the bar is being raised on a number of issues. The most obvious, of course, is climate change. But companies are also increasingly expected to report on their own performance and weigh in on many other issues, including racial, gender diversity, etc. Ultimately, corporate reputation, I would say, is now inextricably linked to a company's agenda on environmental and social issues.
So I mean, okay, let's specifically now do some comparison from your view. So do you see those stakeholder expectations? I mean, there's such diverse stakeholder expectations in this subject, converging or even diverging in APAC compared to, say, Europe or America?
I think to some extent, stakeholder expectations for a company will always vary according to the cultural and social context that that company operates in, which is why global companies should always look to understand that variance in the markets in which they operate. A program of change, for example, developed to engage suppliers in Europe is unlikely to work quite so effectively in Asia Pacific. Of course, that has always been true in any communications context, but some companies seem to lose sight of these fundamentals when dealing with big global sustainability issues like delivering net zero emissions through their supply chain. I would summarize, though, in answer to your question by saying that the picture is mixed. To some extent, APAC is highly interconnected to the global economy through supply chains and international financial markets, and the direction of travel in terms of stakeholder expectations are quite closely linked to European and American markets. But there is divergence too, and so I wanted to share some data that we have observed that demonstrates the similarities and differences based on 4 different stakeholder groups. The first of these are investors and financial markets. And there's some data on the slide, but I'll talk broadly around these different stakeholder groups and then address the data on the slide. But there is no consistent regulatory framework covering disclosure of environmental or social performance across Asia Pacific. The approach by the region's capital markets is highly fragmented, but there are some positive signals of change. So, for example, all major markets in APAC already have ESG disclosure guidance in place and are partners of the UN's Sustainable Stock Exchanges initiative. The stock exchanges have also provided written guidance on ESG reporting that is in line with global standards, such as the Global Reporting Initiative, the Task Force on Climate-Related Financial Disclosures, and the Climate Disclosure Standards Board, which is now part of the International Sustainability Standards Board. Arun was talking about acronyms before. We've got plenty in the ESG space, but I won't. I'll try and give the full name of these organisations. But this means that listed companies are required to publish annual ESG reports that cover material ESG information, which is a very positive step forward for companies in terms of disclosure and transparency. Also, exchanges in Malaysia, Thailand, Vietnam, the Philippines, and Hong Kong have requested ESG reporting as a listing rule, regardless of company size. So any new companies listing on those markets have to comply. So there is greater consistency emerging for capital markets and investors. However, we don't yet see, in another respect, we don't yet see the same volume of pressure on corporates as we do in the US and Europe through activist investor groups using things like special resolutions. So the likes of Share Action and Client Earth. We've started to see more resolutions in markets like Australia and Japan. We had the first climate resolution in Japan in 2020, and I think this year we've seen 4 more submitted in Japan involving several corporates there. That said, I would say, APAC institutional investors are starting to be represented in international initiatives as well, like the GFANZ, the Glasgow Financial Alliance for Net Zero, which was launched at the COP26, and earlier this year in June, a regional network for APAC was launched and now has a headquarters in Singapore. And we'd be remiss not to talk about money and capital if we're talking about investors and financial markets. And as the slide here shows, there are significant volumes of capital being raised through the issuance of green bonds, and you can see 4 of the top 10 issuers in the first half of this year being from China. There is, though, still quite a way to go, and according to the UN's Race to Zero campaign, the region is going to need upwards of 13.6 trillion in investment this decade to advance towards net zero transition. And that's the forecast is for the region to ultimately drive more than 40% of the global transition finance required to deliver net zero. So there's a long way to go. Good signs of consistency growing, but a long way to go. The second group, and closely related, I think, to the first, is the regulatory context. In APAC, it's a vast political, economic, and social differences among countries, which translate into diverse sustainable finance regulations. Even for ESG factors that are the easiest to measure and compare, carbon emissions, for example, there are still no common goals in the region. And so far as well, only China, South Korea, Japan, New Zealand, and Indonesia, as far as I'm aware, have set net zero targets, although that list is changing quite regularly, which is therefore sort of setting the baseline for regulations to be developed. We also don't yet see the same level of litigation against governments and corporates. So, for example, research by the law firm White & Case last year showed that there were 20 climate lawsuits filed across the Philippines, South Korea, Japan, Indonesia, India, and Pakistan, and none in countries including China, Malaysia, Singapore, Thailand, and Vietnam. And these numbers are all on the charts that you're seeing, but Australia does have a significant number with 116 cases, but by comparison, the United States had 865 climate litigation cases in the same time period. So this lack of consistency in regulatory requirements is also giving rise to greenwashing, and according to data from Schroders, around 56% of the 173 Asia-Pacific institutions surveyed indicated that greenwashing was their most significant obstacle to their sustainable investment intentions. So there is definitely a growing need for increased regulation. And that's a similarly acute problem in the Europe and US, where there is starting to be greater consistency through the development of initiatives like the EU's non-financial reporting directive and the SEC's current consultation on disclosure emissions requirements, and through non-state schemes like the International Sustainability Standards Board consultation on climate-related disclosures. So everything's moving in the direction of better, more consistent regulation. Asia-Pac is a little behind, but not far behind, and there's really good evidence that progress is being made. The third group that I wanted to talk about in terms of a driver for change is supply chains. all of the stakeholder groups and influencers that we talked about so far will have trickle-down effect into Asia-Pac, but this is especially true in supply chains. And supply chains have been under enormous pressure, obviously, following COVID and various economic and political shocks. But APAC continues to represent a really vital source of resources and manufacturing trade in addition to growing consumer markets. And brands are expected to take responsibility for the environmental and social impact on the business that they work with throughout their global supply chains. There's been several notable controversies as brands have discovered poor behavior of their partners in the making of their products in sectors as diverse as fashion, technology, agricultural sectors in particular. But now there are new requirements, and as global businesses set, for example, net zero commitments that include what are called scope 3 emissions, which include emissions through their supply chain. Those suppliers, there will be a significant knock-on effect for suppliers, businesses in Asia Pacific. And at the moment, just 8% of companies in APAC have committed to net zero targets, according to the Climate Disclosure Project. But given that average scope 3 emissions total more than 11 times scope 1 and scope 2 volumes for companies, the effect of global company commitments through the supply chain are likely to be significant in the coming years. And as the chart that you can see on the screen shows, this is a study from McKinsey. And today, over 50% of the companies that have set net zero targets with CDP and the Science Based Targets Initiative to cover scope 3, these companies are committed to getting their top suppliers or customers to set decarbonisation targets. And overall, those targets cover between 8 and 12% of regional emissions in Asia Pacific. So already from the commitments made in other parts of the world, the supply chains in APAC are going to have to see, and companies in APAC are going to have to see change. And so that pressure for change is only going to grow beyond climate metrics as the future looks for brands beyond environment and into social issues as well. The final group is consumers. And sorry, I've gone on rather long time, but I really would love to get your sort of thoughts and feedback on and questions related to these. But I think consumers is really interesting because, you know, HS, when you started your introduction, you said, and I think it's true to an extent, there's this perception of a lag in Asia Pacific when it comes to these groups. But the data for consumers is really mixed. Some studies are starting to show that concerns about cost are displacing consumer interest in the environment or social credentials of the products they consume. And of course, the data will always be different depending upon product category, history of consumer experience in that category, which is why brands still need to do their own research to understand their own consumer. But here are some findings from a study conducted by Bain & Co. this year, which included more than 16,000 consumers across 11 countries and 7 consumer product categories. I think what's really interesting in this chart is that while APAC consumers clearly have different priorities when compared to European and US consumers, proportionally more care about whether the product they are buying is good for the planet. And surprisingly, the data also showed that consumers surveyed in the region's fastest growing markets like China, India, Indonesia, Thailand, Malaysia, the Philippines, and Vietnam are more conscious of environmental and social factors than those in more mature markets like Australia, Singapore, Japan, and South Korea. And when asked which entity should have primary responsibility for helping consumers to shop for sustainable products, respondents said that brands and governments are the top 2 groups responsible for leading the change. And in 4 of 11 countries, they said that brands should do even more than government. So there's a really high expectation from consumers on brands in the region. And overall, consumers in the region are asking questions of brands that they need to be ready to answer.
This is very interesting. I mean, obviously it looks like APAC, despite the regulation, fragmentation, and even when we actually looked at statistics on the actions from activists, I mean, it's much lower than what I would have expected. But if we look at consumers, again, this shows this category is going to be driven by the consumers in APAC. And that is very clear. And I think this is where we see reputation risk, because directly consumer is where the reputation risk is going to happen. And also, you know, Susie from MSL previously talked a little bit about the internal comms, the importance of the internal stakeholder. I mean, that is also another area where that risk and reputation is going to be really hitting on in terms of the knockoff effect. So, I mean, so from all this, what does leadership look like? I mean, that would be sort of like my last question to wrap it up.
Thanks. And you're absolutely right. There are so many other stakeholder groups. Obviously, in the interest of time, we focused on these 4, but there are employees, other groups that are particularly influential. When it comes to leadership and enhancing reputation, I think leadership now requires companies to represent the interests of the issue as much as the traditional interests of business. It's no longer enough to simply focus on doing less harm. This has become the standard expected for companies in many respects. And instead, companies are seeking to distinguish themselves, really need to now consider how they will have a net positive impact on the issues that they and their stakeholders care about. I guess a good example here is Microsoft, who have set out not just the net zero climate target, but have pledged to remove all legacy emissions in the atmosphere since they were incorporated as a company. Another recent example, of course, is Patagonia, a brand that has been pioneering environmental stewardship for years, but whose owner has recently put the company in trust and specified that future profits are spent on accelerating action on climate change. And I mention those two not because everybody needs to be the same as Patagonia or Microsoft. These are examples of leadership that provide useful inspiration for those perhaps just starting their journey or making continued progress. But the scale of their ambition shouldn't deter others. There's still an opportunity to secure reputational dividends and to better understand and avoid reputational risks by investing in developing your sustainability and social impact strategies. Every company is different. The expectations of their shareholders, stakeholders, and opportunities to distinguish themselves will be different too. It's about finding the territory that's right for your company by asking important questions like, what aspects of our business have the greatest material impact on the environment and society? What issues align best with our values and purposes of business and therefore feel authentic for us to focus on? What issues do our stakeholders care about? What offers the greatest opportunity for positive impact? And I guess, of course, what mandatory requirements are we going to have to comply with? So those are the sorts of questions businesses need to start to answer. And there are opportunities for leadership, but they're going to be different depending on every organization.
Yep. So Arun, I think we are on time. So you know, we actually wanted to do some questions, but I think we overran. So we will end here. But obviously, the key learning here is the reputation component, where definitely our consumers in APAC is smart and they want action. They're demanding. Corporations are lagging behind. Regulations lagging behind. We as communicators, we need to fill the gap. Where's the risk? Where's the corporate reputation element that we need to look at? I think this is the status. There's still huge ways to go in APAC. That's in conclusion. The status of our sustainability comms in APAC at this very moment. Thank you.
Thank you so much.